an amazing, distinguished panelist joining us for the next Fireside Chat on how giving control of data to citizens will unleash the next wave of growth for the securities industry. Our next speaker is well known to you all, and I won't say I would say that he needs no introduction because it is always a pleasure and an honor to introduce Mr. Nandan Nilekani. Mr. Nandan is the co-founder and the chairman of Infosys Technologies Limited. He was the founding chairman of the UIDAI and was in the rank of the cabinet ministry from 2009 to 2014. Most recently, Mr. Nandan has co-founded and is the chairman of EkStep, a not-for-profit effort to create learner-centric, technology-based platform to improve basic literacy and numeracy for millions of children. Born in Bengaluru, Mr. Nilekani received his bachelor's degree from IIT Bombay. Fortune magazine has conferred him with Asia's Businessman of the Year in 2003. In 2005, he has received the prestigious Joseph Strumpter Prize for Innovative Services in Economics, Science, and Politics. In 2006, he was awarded the Padma Bhushan Award. He was also named the Businessman of the Year by Forbes Asia. Times magazine listed him as one of the 100 most influential people in the world in 2006 and 2009. In 2017, he received the Lifetime Achievement Award from EY. He has also authored and co-authored several books like Imagining India, Rebooting India, Realizing a Billion Aspirations, and The Art of Bitfulness, Keeping Calm in the Digital World. Welcome to the forum, Mr. Nandan.
Thank you.
Great. With that, I would like to also formally welcome Mr. Suresh Sethi. Mr. Suresh has over 3 decades of diversified global experience in the financial services industry and works extensively in the financial inclusion space, leveraging fintech and digital-led innovation to make differences. He is currently the managing director and CEO of Protean e-Gov Technologies Limited, formerly NSDL e-Governance Infrastructure. In his last role as a founder and CEO of and MD of India Post Payments Bank, he has established the largest interoperable banking infrastructure for public goods at scale in India. Prior to Indian Post Payments Bank, he has had various roles across various organizations. Primarily, he has led the business strategy for M-Pesa in India as a managing director and CEO for Vodafone M-Pesa. In his earlier assignments, he has worked with leading financial service companies such as Citigroup and Yes Bank across multiple geographies, covering India, Kenya, UK, Argentina, and US. He has held several senior CXO and managing director level positions at regional and global levels. For his contribution to the financial service sector, Mr. Suresh has been recognized by the Asian Banker as part of the Asian Bankers Award and the list of the leading practitioners. He was also recognized as the CEO of the Year, India Post Payments Bank at the India Banking Summit and Awards. With that, I would like to acknowledge the presence of our chairperson of SEBI, Ms. Madhabi Puri Butch as well. Welcome to the forum as well. And with that, I would like to welcome our Mr. Avnish to formally welcome our panelist. Mr. Avnish Pandey is the Chief General Manager of IT and Securities at the Securities and Exchange Board of India. At SEBI, he is responsible for technology oversight of financial markets infrastructure and implementation of SEBI's strategic directions and innovative projects. He has over 31 years of IT experience with 26 plus years of financial markets regulatory experience. I would formally welcome Mr. Avnish Pandey to the forum.
Good morning to our eminent panelists. And on behalf of SEBI, I formally welcome Mr. Nandan Nilekani and Mr. Suresh Sethi, and it's indeed a great honor and privilege to do so. We'll look forward to a very insightful fireside chat, and I'm sure our audiences would find it really stimulating and find good innovative solutions to energize our securities market. With that, over to the eminent panelists for this insightful discussions. Thank you, sir.
Thank you.
Thank you. Nandan, good morning.
Morning.
Pleasure seeing you again. And Nandan, the topic that we are covering is how giving control of data to citizens will unleash the next wave of growth in the securities industry. Now, looking at the securities industry, when we look at the BFSI sector, the securities industry has been a forerunner in adoption of cutting-edge technology. Right from establishing the Central Securities Depository way back in 1996, the entire industry has been way ahead of the curve in introducing near-time, real-time settlements. And as a result, there are huge customer data pools today sitting in the securities industry, and they're very interestingly pooled across various organizations. So the entire journey has been very different from the payments and the financial industry on the other side. So would like to hear from you, what are these pools of data? What is this technology we are talking about? We'd like to hear your comments on that.
Thank you, Suresh. And I think before I delve into the present, I just want to give a historic backdrop. I see this as the third phase of technology in the securities market, and a very exciting phase. The capital markets and the security industry has always been at the forefront of technology automation. The first round of that actually happened in the 90s. And after economic reforms in 1991, one of the major areas of reforms was securities market. It also helped by the fact that there was a very talented pool of top bureaucrats of those days, Mr. G.V. Ramakrishna, D.R. Mehta, R.H. Patil, Chandu Bhave, P.J. Naik, Y.B. Reddy, amazing people at that time. And then, of course, we had the 1992 Harshad Mehta episode. So that led to a big push to reform the capital markets and led to the creation of these great institutions. SEBI was set up in 1992, NEC was set up in 1992, NSDL was set up in 1996, CDSL was set up in 1999. And fundamentally, it was probably the first major national market that was completely automated and dematerialized. So, SEBI and the capital markets have been pioneers. And that was the phase one of what happened in the capital markets. I think the second phase is what's been happening in the last several years. I think one is the compression of settlement. I think SEBI has done an amazing job in notifying T+1 settlement, which is getting rolled out in a big way. India is one of the few global markets which has T+1 settlement, and it has the potential to go to even T+0 or real-time settlements. The second thing has been the integration of digital payments into capital markets. There are two great examples of that. One is the ASBA application on UPI, using UPI. And the reason why that's important is that now, especially with smartphones and all that, people are able to apply for with one click on the phone, they can apply for IPO, they can block money using ASBA, and then the money is debited to the account only when the shares are actually allotted. And I'm told more than half the IPOs today have ASBA coming through UPI, which is an amazing change in a matter of 3 to 4 years. And that will dramatically accelerate primary market transactions, including the upcoming one with LIC. The other important thing is the changing nature of capital markets. I remember when the Indian markets began, and at Infosys, we went public in 92, 93. We were among the first companies to do a free pricing of IPO. And we also, at the same time, the foreign investors came into India, so Morgan Stanley and others. And for a long time, the foreign investors were the bulwark of the Indian market. And they also benefited from a lot from the value growth that happened. And it was something quite very big that happened. But today, there's been a sea change in the Indian markets, and there are two new sources of capital coming into Indian capital markets. One is, of course, what's coming from pension funds. So people like EPFO are now giving part of their money allowed to invest into ETFs and so on. And the second is the rise of SIPs. And in January alone, SIPs was 11,000 crores. And that means that Indian money is now coming in, both retail money as well as institutional money. And in fact, even though in the last several months, the FII money has been going back, going out of India because of rising interest rates in the US, the markets have not gone down because Indian money is replacing the foreign money in some sense. So this is a big change which is happening. And also, I think the dramatic retailization of the markets with all these devices, with UPI, with demat accounts, digitization. Just to give a sense of what happened between 1992 to say to 2018, we had about 4 crore or 40 million demat accounts. And then in the last 3 years, the number of demat accounts have doubled from 40 million to 85 million, or 4 crores to 8.5 crores. So we see a dramatic expansion. So this is the second phase of technology in capital markets. And now we're entering into a third phase where the account aggregator system, which is getting rolled out, will allow people to leverage their own data in different ways. And this, along with the real-time nature of transactions, the fact that UPI credit will be available and so on, means that we are going to enter a world where we will have population scale participation in capital markets at very high volume, very low cost, very real time. And India's asset map will start shifting from physical assets like real estate and gold to financial assets. So let me just stop here and we can continue.
Nandan, thanks a lot. That was an excellent synopsis on the securities markets and their evolution over the last years. What I would like to now delve into is the main area about data and the use of data. I'm going to quote you. You said that globally, most countries are thinking of data protection. And we are one of the very few countries which have built a data empowerment architecture. As you rightly called out, starting the journey from Aadhaar, the national identity, going on to introducing digital payments, account aggregator is actually the third phase of data and data usage. And it's a first of its kind model, and it turns data on its head because it empowers the people. How do you see that evolving in the securities market today with some of the numbers you called out and the adoption that is happening in this case?
Well, I think the securities market is going to benefit hugely from data empowerment. Data empowerment is a uniquely Indian idea where we believe that, unlike in other countries where data is with companies or with governments, in India, data can be in the hands of individuals and businesses. And the data empowerment architecture is something which is used for that. This allows people to get access to the data from multiple sources through a third-party intermediary called as the consent manager. The consent manager, I talk to my consent manager and say, give me my data from this mutual fund, or give me my data from this bank account, and I can share that with somebody providing some kind of an application that is there. The account aggregator framework actually has been approved at the level of the FSDC, the Financial Stability Development Council, where all the regulators are there together. And therefore, it's really common across all the regulators. The first use case, of course, is in credit and banking. And as you know, thousands of requests already happening on that. But in the capital markets, also, there are going to be many, many applications. And some of them I can't even visualize. I think some great startups will come and provide that capability. But two applications that I can think of account aggregator in capital markets. One is loan against shares, because people will want credit. People will want credit to apply for IPOs. People want to get credit for their existing holding. They'll have to provide the margin money, and then obviously if the share prices start falling, then there has to be an automatic sell so that the loan is repaid. That whole infrastructure can be automated in India. And therefore, I think we can create a very, very sophisticated, at the same time, safe loan against shares architecture. The second is in guiding people to personal finance management. And people are going to become more financially literate as they move their assets from physical to financial, and helping them do their planning. In the beginning, they may have more risky assets. Towards the end of their life, they may have more income yielding assets, whatever is the asset portfolio over time. So personal finance management applications will also emerge. So I see data empowerment becoming a very big thing. And I think it, along with all the other dramatic changes happening in the capital markets, as I said, we went to 40 million, demat accounts in 25 years, and then we have gone to 85 million in three to 4 years. So if we continue that trend, as more and more investors come into the markets, I think all these other things will help accelerate that as they get access to loan against shares or personal finance management applications and so on.
And then taking a segue from there, that we see that goes without saying, there's data and data pools getting created, and Indians are going to be data rich even if they are not economically rich, and that's the direction and the journey we are on. Today we see data pools lying across multiple sectors. So even if you look at the financial sector, it is not just Reserve Bank of India managing one pool of data as a regulator. SEBI comes in with the entire securities industry's heft. Then we are looking at PFRDA and pension data. We are looking at the insurance data. And I would say we even extend it to other sectors like healthcare and education, where data plays a very important role in empowering the citizens. How do we see that as we go forward? How does the interregulatory alignment happen? And how does AA become a truly multi-sectoral data ecosystem?
Well, first of all, I think in some sense, the foundation for that has been laid, at least in financial services, because the account aggregator network has been notified at the level of the FSDC. So all regulators are, sort of have accepted that this is the framework. It's absolutely important that these data pools be interoperable, because the consumer must be able to access different digital pools of his own, and then use that for multiple applications. As you said, I want to get my bank statement, I want to get my mutual fund records, I want to get something else. So I believe that is important. And one thing about the Indian DEPA, or data empowerment architecture, which is based on the AA and having third-party consent managers, is that it can be applied to any industry. So for example, the NHA is working on the Ayushman Bharat Digital Health Mission, and their your electronic health record will also use the DEPA infrastructure, so that you can get your health records and take them somewhere else to get a second opinion. And similarly, the whole education infrastructure of degree certificates and skill certificates will also use your DEPA infrastructure. So for example, if you are a taxi, if you drive a taxi on a ride-sharing platform, you can take your data from there with a good track record and get opportunity somewhere else. So I think we're going to see the use of DEPA not only across all the financial services sectors, but also outside that. And that's going to make a huge impact, because Indians are data rich before they're economically rich. That's the fundamental premise, And therefore, if there's a way that we can help Indians leverage their data and become also economically rich and better off, that's really the future. And no other country has even thought about these things.
True, Nandan. And then one of the things we are seeing, and I would again say, while we are at the early stages, some of the early use cases have clearly shown today, when we look at the data and the account aggregator ecosystem, 99% of the consents today have been for the use of credit, or for acquiring or sourcing credit. What other use cases do you see happening, which you would encourage the industry to explore as we go into a multi-sectoral sort of data equilibrium?
Well, I think the reason why most of the 99% is credit, because really all the people now participating, whether it's the banks, whether it's the account aggregators, or whether it's the consumers and small businesses, are looking for credit, and that's where the action is. But once the other regulators, particularly SEBI, starts adopting account aggregator, and I'm sure that's something which is on Madhavi's mind, I think that you will see these other kind of applications I talked about, loans against shares or personal wealth management. See, we have to realize that we are a country which is on the verge of a phenomenal transformation of assets. Today, the total capital markets of India are approximately about $3.2 trillion. I know the exact value of Indian capital markets. And the total value of gold assets in India is about 2 trillion. Because Indians love gold, and India is the largest pool of private gold holding in the world. Now, the US was something similar many years back, maybe 20, 30 years back. The value of the US capital markets and the value of US gold holdings would have been comparable. But today, the US capital markets are worth $27 trillion, whereas the gold holdings continue to be in the sub $5 trillion range. So we can also expect that in the coming years, today the gold is 2 trillion and markets are 3.2 trillion. 10 years from now, gold may still be 2 trillion, but markets will be much more. And younger people are also coming into the markets. And one thing we must also realize is that for millennials, a big competition is crypto. I mean, I think we should not, of course, currently we are in, we don't know exactly what the regulation and laws of crypto are, but today, many young Indians, their first capital market investment is a crypto investment. These guys are going on, Coinbase or FTX abroad, or they're going on Kuber, CoinSwitch Kuber or Wazir or whatever it is, and they're buying some Bitcoin or Ethereum or something like that, right? So and therefore those people are going to those markets because they are 24/7, real time and instant settlement. So we have no choice, but the mainstream financial markets have to be as efficient, real-time, 24/7 as crypto markets if you want to get those guys into the mainstream financial world. So that's another reason why we need to make these capital markets much more real-time, 24/7, instant settlement, low transaction cost, and so on.
Sure, Nandan. Nandan, a very vested question I would ask over here, that it's early days for the AA players, and to really invest in customer acquisition at scale and to take it to the last mile and get as many people who are desiring credit to be part of it, there will be a requirement that there's a lot of investment and a lot of hand-holding to be done. So what are your thoughts on the business models for AAs today?
Well, I think there is going to be, it's again going to be high volume, low cost, transaction fee model. If you are going to service 1 billion Indians, it has to be very high volume. It is better to make a small amount of money on a large number of customers and a large number of transactions than a lot of money on a few transactions. So I think the big shift is going to be towards this high volume, low cost, low value transaction model. And the same thing will apply to AA. And I think this also means, see, one thing that has happened is the capital markets essentially got their backend infrastructure in place, right? So we have the dematerialized accounts in NSDL and CDSL. We have electronic trading. We have the exchanges that are the NSE and BSE. We have, we have the electronic discount brokers, the traditional ones like ICICI Direct and others, and your new ones like, Zerodha and Grow and all these guys. And effectively, trading on cash has gone to zero cost. So many of the exchanges, the brokers are offering zero cost trading for cash and only charging a flat fee for derivatives. So all this is in place to increase the markets. And I also see a lot of startup activity happening here, because once all these things are in place, then we are going to see enormous startup activity, because they know how to get consumers, they know how to create a consumerization experience which can reach out to all the countries. We are going to get more and more Indian language interfaces. So some guy sitting in Bihar can trade entirely in Hindi and so on. So we're going to see a lot of that. All that is going to drive. I mean, a good example is there's going to be a shift from gold to financial assets. And now there are many companies coming forth like Rupeek and all that who are offering completely automated gold ATMs where you can deposit your gold and convert that into a financial asset without meeting a human being. So I think startups are going to do some innovative stuff that will expand the market. I see a huge boom in the capital markets driven by domestic capital, domestic innovation, and real-time, high-volume population scale systems.
And then actually that was going to be my next question. You partly addressed it, but you're absolutely right that as we go forward, the startup ecosystem has a very strong role to play over here, because as these, I would say, digital rails get created and gives the startup industry to participate. We've seen something very similar happening in the payments industry. On top of UPI, various business models, various startups have contributed. What would be, I would still seek more thoughts from you in terms of what problems or solutions should the startup world be looking at solving in this entire ecosystem of account aggregators?
Well, first of all, it's about access, right? We have, if you look at the newer brokerage guys like Zerodha, Grow, and all that, they have basically brought in a whole new set of customers into the capital markets. That's one of the reasons why your retail base is so high. and because your SIPs are at $11,000 crores per month, because you have brought in retail payments, and they'll implement SIP auto pay and all that. So it's really getting more and more people. See, we have to get millions of Indians into markets, because finally for Indians, savings will happen because of compounding in capital markets. Savings will not happen through keeping gold or something like that. They'll really have to, at least a part of the savings. Obviously, you have to think about. So wealth creation has to benefit every Indian, and they can do that. They can offer much better products for financial literacy. They can offer much better products for credit for people who own shares. I think, frankly, my own experience in the startup world is I keep meeting companies who are doing things I could never imagine, and that to me is the thing. We are all limited by our own experience and imagination, but some young lady out there will come up with some application which I didn't even think of. I'll say, wow, these people have thought about stuff I have not thought about. I think that's going to be the big thing. But we have to enable this by having ubiquitous access, low cost, API-based things at real time. Then the market innovation will take over.
I agree, Nandan, and I think I would also add to that today there is a lot of AI business models which are coming in the space of especially the securities market,
sure,
where we are doing a lot of predictive modeling and analysis. I think that would again be a very important part, even if it is for credit upliftment and scoring. Some of these models will get very much embedded in what the startup ecosystem can solve for.
Yeah, I agree. And I think it's very important. If we're going to have hundreds of millions of Indians participating, we have to give them a fair market. We have to get them a liquid market. We have to make sure there's no fraud. We have to make sure that the corporate governance is the highest caliber of companies, because these are the savings of millions of Indians. So clearly, all that also has to happen, and technology will play a big role. And I know that SEBI and Madhuri are looking at how to use technology in all these things.
Thank you, Nandan. That was very, very illuminating. We got a lot of information both on the securities markets and the history of it. I would pass it on to the SEBI administrator to tell us if there are any questions that you would like us to answer, or that you would like Nandan to answer.
Yeah. Great. Thank you so much, gentlemen, for those amazing insights around capital markets and the phase-wise shift which the overall capital markets has been gone through. With that, I would like to sorry. With that, I would like to formally welcome our SEBI chairperson, Ms. Madhabi Puri Bush, to the virtual stage to express a few words of gratitude. Ms. Madhabi Puri Bush took charge as the chairperson for the SEBI in Mumbai on March 2nd, 2022. Ms. Bush has served as a whole-time member SEBI till October 4th, 2021, and she has also served as a consultant to the New Development Bank in Shanghai. She has also served as a head of the Singapore office in the private equity firm Greater Pacific Capital, and also has been the managing director and the chief executive officer at the ICICI Securities Limited, and as executive director on the board of ICICI Bank. Ms. Bush also served as a non-executive director on the boards of various other companies. She holds an MBA from an Indian Institute of Management, Ahmedabad, and is a graduate in mathematics from St. Stephen's College in New Delhi. Welcome to the forum.
Thank you very much. I really enjoyed that session. Thank you so much, Nandan and Suresh. Of course, Nandan is very familiar with my passion for data. So anything that has to do with data has my vote right away. And yes, Nandan, happy to share that SEBI indeed will be joining the entire account aggregator system.
Oh, fantastic.
Yes. This is something that we are, now at the implementation stage, where we are exchanging data formats and API formats for our market participants. So the entire trading system, depository system, as well as the entire mutual fund system will soon be online in the aggregator system. So
fantastic.
More power to data.
Very good.
I would like to, I usually get asked a lot about the markets, but this is my opportunity to share my thoughts on innovation and on data. So I'm going to take this opportunity to share 3 thoughts with you. The first is really about innovation and how I look at innovation. There is a lot of, what shall I say, achievements that people do through innovation and through creativity. They build businesses, they create value for consumers. As Nandan has completely transformed the landscape of India through his creativity and innovation. But behind it all, I do believe that if you don't have fun doing it, I'm not sure that the payoff at an individual level is really there. And I'm sure that people like Nandan, when they were on their journey, and sometimes those journeys are tough, at the end of the day, a lot is created, a lot is achieved, but along the way, I'm sure that people like him have had tremendous amount of fun doing what they are doing. And to me, that is an even richer reward than making billions of dollars, which of course, incidentally, Nandan also made, but that's incident. So this is, one thought I want to share with a lot of youngsters. Do what you do because it's exciting. Do what you do because you enjoy it. Because at the end of the day, you're going to devote, a very large part of your life, of your waking hours to what you do. And if you don't have fun along the way, it isn't worth it, actually. The second thought that I would like to share is really about how very often it is assumed that, creativity and innovation is only about the big bang changes. Now, while that is true, there is a lot of fun along the way that you can have through little things that you do. And I must say my own sense of fun over the last almost 30 years of my career has been in the little ones. I have not created anything which is earth-shattering, but I've had a lot of fun along the way because, little things, little steps, which seemingly at that time look quite insignificant. In my view, they all add up. And they also give that everyday feeling of going back home and when your head hits the pillow to say that I enjoyed today because I did something a little bit better and a little bit newer. The last thought I want to share with you is, of course, about data, because that is my passion. And I would say to all the young people here that this is my belief. And I want to share a very, very short story with you. A few months ago, I met a young gentleman, who had joined his father in what was a somewhat traditional business. And they used to look at assisting people in doing GST and filings. And this young gentleman said, let me see what I can do with the data. And he said that I started to analyze GST and data. And I looked at him and I'm like, there is no GST and data in public domain. What do you analyze? And he says, no, for every company, there are 2 dates that are available. And I'm like, dates? He says, yes. Every month, there is a filing that the company does where they upload the data, just the data related to their GST and filings related to revenues, purchases, sales, purchases, etc. Okay, it's just a filing, data filing. The second date relates to the date when they actually make the GST and payment to the exchequer, and they upload the receipt of the fact that they have paid. So he says the data shows that most people are extremely prompt in uploading the first filing because that's just data. You don't actually have to pay anything. But there are a large number of companies who start showing a pattern of delay in the second filing, which means they are delaying statutory payments. He said he analyzed that data of that delay in filing the second filing and developed a predictive model of which company is likely to default on its loans, because if it is delaying statutory payments, it means he has a cash problem and he is at high risk of defaulting on his loans. That's the manifestation of the data smoke. It was just 2 dates. I mean, I could not have imagined that you could do what you could do with 2 dates. But that was the smoke. and he built a fire out of it. And he now has the top banks of the country as his clients who use his analysis in order to really check the credit worthiness of their clients. Now, with greater and greater data of GSTN becoming available, and perhaps in the future, perhaps even becoming a part of the account aggregator kind of system, who knows, we can all hope. Just imagine what these two, father and son, can do about it. So it's just a short story to tell you that even with a little, you can do a lot. And as far as SEBI is concerned and the markets are concerned, we have taken a very conscious and public decision to say that all data which is market-related data, which is in the public domain on account of regulatory mandate, and that's a ton of data, has to be accessible free, not just to investors, but to people who can download it, access it, add value to it, and make a business of it. Now, you can imagine that there was a lot of resistance to this. So the people who are the gatekeepers to this data obviously were keen to keep that value to themselves. And SEBI took a very firm stance that if you do not do that, because this data is available to you only because we have mandated it as a regulator, if you don't do it, very soon we'll just take it off your websites and we'll keep it only on the SEBI website. And then, of course, we'll give it away free. So as you can imagine, that changed the minds of lots of people very rapidly. But here is the proposal to each one of you who's listening, that market data is available to you in a completely easy to use way, including archived data, which is available to you free. Nobody can ask you to pay for a jot of it, even if you are using it for commercial purposes, because that is the objective of SEBI, that data should be a public good. It should be available freely and free. And then that's the smoke on which we hope that a lot of young people build their business fires. And of course, I see that Sharad has joined us. So I would only like to acknowledge that people like Sharad and Pramod, who sit on our advisory committees in SEBI, give us a lot of food for thought. They help us to articulate this kind of a thinking, first of all, to think about it and then to articulate it. So as SEBI moves towards greater and greater data empowerment and data democratization, I would like to acknowledge the contribution of people like Nandan, Sharad, and Pramod, who guide us on our journey. Back to you.
Thank you. Thank you, Madhvi.
Thank you, Madhvi.
Okay. Thank you so much to all the distinguished guests. With that, I have a couple of questions at my side from the audience members, but with respect to the time, I'll take only one or two of them. I'll let me read out the question to Mr. Nandan. With advocacy underway to include numerous other verticals such as GST, PF, NPS, utilities, telecom, tax, among others, do you believe we have the right regulatory model in place to govern new types of FIPs with the RBI as the lead regulator? How could we accelerate the inter-regulatory alignment as the account aggregator becomes truly multi-sectorial in a data ecosystem?
Well, I think already account aggregator is multi-sectoral. As Chairman Madhavi just said, SEBI is fully aligned on the account aggregator framework. And the account aggregator framework is made available at the level of the FSDC, which is all the financial regulators. The 5 of them come together there. And I'm sure government will bring all the other regulators on the same board. What we have found is when you have a technology-enabled system, the moment people sign up for that, then automatically it's taken care of because the data formats and standards are the same. For example, tomorrow, if TRAI says that mobile consumption data, like mobile payment consumption data is on AA, then millions of people who are doing prepaid accounts will get access to credit because of the record of buying talk time. So I think you will see this happening, and each time you add a new piece of data to the puzzle. So you add GST and suddenly 11 million businesses will be able to participate in credit. The moment you add telecom consumption data, then another few 100 million Indians who use mobile phones, their data comes on the system. Each of these things will have a step function And I'm quite convinced that everybody will recognize that the value is all of us coming together. So I don't see any challenges at all on the interregulatory issues.
Right. Absolutely. Thank you so much for those amazing thoughts. And as you mentioned, like with a overall framework being created as an like regulatory free itself. So I think that we don't as well see that sort of a challenge. With that, I would like to formally thank Mr. Nandan, Mr. Suresh, Ms. Madhavi, as well as Mr. Avnish for joining us today, and move ahead with the agenda.